It's time for Operation Freedom with your host, Dr. Dave Janda, on Southeast Michigan's conservative powerhouse, Wham Talk 1600.
Thanks for tuning in, folks, and welcome back to Wham Talk 1600's Operating Theater. It's the only OR in all talk radio. I'm Dr. Dave Janda, broadcasting from a safe and secure, undisclosed Level 3 Freedom Bunker, linked to Wham Talk 1600's Freedom Bunker, all because Derek Stone is able to pull it off yet again, much to the chagrin of the totalitarians in our country, around the world, and in particular, our local totalitarian du jour, that being Gretchen Whitmer, our so-called governor, but we fondly refer to her as our benevolent, not so benevolent, Commandant Klink, if you will, equivalent from Hogan's Heroes. Folks, every week in our operating room, we dissect current events that are impacting you, your business, our community, and our country. And we do that with this radio show every Sunday from 2 to 5 Eastern. We do that with our YouTubes that we present, a couple of YouTube presentations on the Operation Freedom YouTube channel, on the YouTube channel itself, where we, if you will, expose the underbelly of the deep state and how they are focusing on stripping you of your freedoms and liberties and what you can do about it. We also are available 24/7 at davejanda.com, both the free, the public side, as well as the subscription side. And let's get it straight. If it were not for our subscribers, this radio show, our YouTube channel, and our website would not exist. We hope you'll become part of our freedom family by becoming a subscriber at davejanda.com. Bottom line, folks, we bring to our operating room information and guests the bought-off, lamestream fake media either ignores because it doesn't fit into their preconceived, politically correct, bought-off agenda, or because, folks, they're petrified. They're petrified of what might happen if they actually tell you what you need to know. This show is about your freedom, your political, your economic, your financial, and your health care freedom. There has been a lot happening in our financial world. Since the inception of this show in October 2010, we have focused on your financial and your economic freedoms and liberties. I am honored to have with us someone who is a regular guest on this show and someone who is very courageous. Courageous because she speaks the truth that the deep state, their tentacle of the bought-off, lamestream fake media do not want you to know about. But because TraderStef brings forward the information you need to know, you are therefore protected. Very few people are willing to do that. She is. Her name de plume is TraderStef, and she utilizes that name de plume because she initiated a career beginning in 1996, spanning 14 years within the New York City investment banking industry. Steph required a diverse skill set in human resourcing, technology and communication, training, education and development, business analysis, and global risk. She began investing in something that many people said was a barbaric relic, but she felt that it was an essence to not only her freedom, but your freedom, that being precious metals, as far back as 1999, while following market trends post-dot-com bubble and 9/11. Steph then left the banking industry in 2009 after 5 years in global risk management, in particular an organization company by the name of Citigroup. TraderStef has since developed and hosted a live Precious Hours webinar focusing on specializing in gold, silver, and the mining equities, combined with research of industry fundamentals, financial markets, global news events, geopolitics, monetary policy, otherwise known as fusion analysis. You can follow Steph at her website, TraderStef, S-T-E-F-F, TraderStef.com. Steph, welcome back to Operation Freedom.
Dr. Tanner, how are you today?
Doing fine. And thanks so much for joining us, and thanks so much for your courage in bringing information to our listening audience that they're not going to get through CNBS or Fox Business News or Reuters or Bloomberg or any other deep state financial tentacles. Steph, let's start with an announcement that occurred after the markets closed on Friday that most people, 99% of people, are not aware of. Can you educate our listeners about that?
Yeah, funny how that works. Reminds me of when the banks were going under en masse back during the heart of the great financial crisis. And every Friday after market close, they'd make the announcement before some other institution would take them over. But Fitch announced, Fitch credit rating service downgraded U.S. debt. They waited until after the market closed on Friday. I wonder why they did that.
Well, tell me if I'm wrong, Steph, but the last time that happened, it was quite the shock to the system. So it appears that, they just wanted to couch it for a couple days and hopefully people wouldn't notice.
Yeah, well, the last time it got downgraded, which was not by Fitch initially, that's funny, was by the S&P and Moody's back in early August of 2011. They put the United States on negative watch, and they kept the AAA rating. But, stay focused on that year, August 2011.
Right.
Gold ran another $300 after that. So keep that in mind. We'll talk about gold later. But the reason that they did it this time were for kind of similar reasons, the common denominator, which is debt and deficits, but the reasons for it are different. So if I just take a look at the article it printed, it said, the U.S. is the home of the world's worst coronavirus outbreak, which has caused tens of millions in layoffs and 33% collapse in the GDP. So with those deficits and that debt, that was already bad before the coronavirus. Anybody thought the economy was just blazing saddles before the pandemic. It really wasn't. It was just kind of flatlined, not collapsing, not running, just kind of hanging out, which is good. It's better than falling or a rocket shot, actually, because then you get a lot of inflation usually. But, who's going to be the next agency to do the ground downgrade? Now, the only good news about that is they kept it a AAA rating. But, when you think this through, what's a credit rating? It's no different than your credit rating for your credit cards. It determines whether or not you're going to get access to credit. So, despite the fact that the Fed is buying most of our debt, that's not a coincidence now. We're not so relying on foreigners to buy, but we still want that faith from foreign countries in our system. It's what keeps the buck afloat for as long as it's still afloat. But, I'm hearing a lot about interest rates, that they're not below zero yet. Mm-hmm. Well, how about reality?
Let's talk about real interest rates and educate our listeners on real interest rates and their significance and what they are.
Well, when you pull up a chart on the 10-year Treasury note, and you go all the way back to 1963, there was a pop back there in the early 1980s that occurred. Remember, gold was running then. Inflation was pretty high. Now it's the complete opposite, because since the early 80s, the interest rate on the 10-year note's been collapsing. We're all the way down to 0.5%. All right, so that's the interest rate they're paying you on that note. But if you take the rate of inflation and you subtract it from, 10 years, the guiding post, that's why I'm using it. You subtract the rate of inflation from that, we're in negative territory. And let's layer something else on top of that. It depends on which inflation number you look at, right? Because the number that hits the headlines is the seasonally adjusted. And that's running, just above zero. It's like a half to 1%, roughly. Okay, let's not get into be off by 0.1%. But when you subtract that, we're down to 0.5% under. But if we take the inflation numbers that they used, let's say for 1980, 1990s, because the Fed changed the way they did the formula. They eliminated some things in that formula of how they're figuring it out. When you take those numbers, and this is a real wake-up call, and anyone can go see those numbers, you go to shadowstats.com. It's free. You get to see his two most recent charts. Otherwise, I think there's, a fee you have to pay. But if we look at the rate, the official CPU, it's right around zero. But when you look at the old school stuff, we're still floating. When you go back to 1990s, we're still floating around right around 4.5% maybe. And when you go back to the 1980s base, we're sitting up around 7%. So just think about that for a minute. Take 4 or 5% or 7% off of that 0.5% on the 10-year note. You know, we're 5 to 7% in real interest rates. So what does that mean for you sitting in your car listening to this radio show? That means not only has your dollar been debased since 1913 and having less purchasing power, that just makes it worse. I mean, it's literally falling apart in your pocket while you're doing nothing because you're not making any money on it. When was the last time you got more than 1% at your savings account at the bank?
Doesn't happen, Steph.
No. Really hurting people.
So one of the big problems is that the media outlets, let's just look at a couple, CNBS, Fox Business News, the data that they present is, some people will say erroneous, some people will say superficial. There are some people that will say, such as myself, fraudulent. And a good indication of this is educate our listeners about what the fake news media in the mainstream media were saying about the latest information as it relates to precious metals, what's called the Commitment of Traders report.
Yeah. Well, one important thing to mention before I dive into that too far, just quickly, is gold. One of the reasons gold has been rising is because real interest rates are negative. I mean, there's lots of other reasons, but that's a pretty big one. So there's a lot of safe haven flows. You're not really getting a return anywhere else unless you're really speculating in the stock market, and that's been pretty rough since March, quite frankly. But remember what Powell said last month in June, just before we did our interview. He said, we're not even thinking about raising rates, and they're not thinking about raising rates until at least 2023. So, right, you really have to digest what that means. So let's talk about the Commitment of Traders reports. I'm not going to say who the mainstream outlet was, but they were referencing to the Commitment of Traders reports. And anyone who's not familiar with that, you kind of like got two sides of the trade in the futures market. It's been that way since the 1970s. It doesn't matter what asset you're looking at, with the dollar, cocoa beans, grains, oil, it's all the same, quite frankly. It's not really a market. But you got three players in the market, two big ones. You've got the large speculators and the commercials. And there's a lot of people within those categories, but generally the way they're referred to by most folks is the commercials are the bullion banks and the people closest to the physical. And the large speculators are like hedge funds and professional money managers. Almost without exception, when you look at a chart for the past 20 years, it's just always the way it is. The large specs are long, they're Momo play chasers, the trend is your friend kind of thing. There's got to be the opposite side of the trade. There always is. There's always a buyer and a seller no matter what you're buying, even in the regular stock market. So the commercials are generally on the short side. So what was said in this article was that the commercials are really short, so the price has to go down. Well, maybe in the near term, that's possible. There's a lot of wiggles that go on in the market. But when we look at a 20-year chart, the last time the commercials went long, which is the complete opposite of what they usually do, was back in the late 1990s. And that was just before we had the rocket shot through to 2011 for gold's first all-time high. The next time they did that, it barely peaked its head, and it really didn't mean anything at the time, but it was 2015 when gold hit its low. And then it flipped again, and that was in 2018. There was this period of time. And that was kind of a heads up, and we talked about that in one of our interviews. So ever since, it's been running crazy, and it went through an important level that we'll talk about. And it's just the mainstream media saying it's going to fall. No, because they said we're at record short positions in the commercial category. Actually, that's not the case. We were in record short positions. It was like almost a year ago. We're not in record short positions. And even if we were, doesn't necessarily mean the price is going to go down.
So, Steph, and we're speaking with TraderStef folks at TraderStef.com. Steph, you are always way ahead of the curve You're way ahead of the people that publish on some of the big websites that are kind of acting like, and some of the that they're the first ones to talk about stuff. But in fact, if you dig deep enough, you find out that you, Steph, are the one that talked about it weeks, if not months, before these folks that are claiming they're the first ones to speak about it. So, Steph, right now, there are many folks, when I watch Fox Business News, CNBC kind of review to see what they're saying, they're giving folks the indication, oh, that gold and silver, yeah, gold and silver are going up, but they're topped out. They're going to go down here. You missed the whole boat here. Up, better to buy some Netflix stock and the like. So, what does your technical analysis show for gold and silver going forward, Steph, being ahead of the curve?
Sure. We'll do both. Let's do gold first, but there's going to be chop along the way. Anything that goes straight up is really bad because then it falls even harder. What you want is a nice, good, solid move, and then some consolidation and some chop, and then a retest of a level that you took out that you waited for a long time to go through and test that as support, and then continue forward, and then you hit another level and you do some more chop. So as far as gold is concerned, it has done really well. And that all-time high that needed to be taken out was in the low 1920s. Let's not talk specific pennies. But that was finally taken out. And that's really important because back in July when I published my last article, I had talked about the 1860, 1880 level that we would get some chop in there. And we did. It lasted about 2 days. Then we just blew it out. It was just amazing. But that 1921 was coming really quick. And it took a little bit more chop, but then it was just a straight shot. And we put in quite a show. And unfortunately, we got a little triple top going on right now, but not on the daily or the weekly chart, because all the charts look a little different when you look at different time frames. So there's a triple top on the hourly. It's not really oversold yet, and it's not overbought. It's kind of like in nowhere land. But there's a pattern that's saying, if it holds, we're not going to stay here too long, and we're going to go upwards. Now, if I flip over to the daily chart on gold, it's definitely an overbought territory, and it deserves a breather. Now, we did go back and test that all-time high of 1921, but real brief, it was within a 24-hour period. But the point is, it did test it as support, and it didn't fall through it. But we could still go there. And I wouldn't be complaining if it did go there, tested it as support, pivoted, and then continued upward. I would actually prefer that for the reasons that I already stated. So I'm going to make an announcement about some numbers that you want to pay attention to when we're going to give it first here on the show. And those are known as Fibonacci extensions. So that's going to tell us what the levels of gold price are to look forward to. And it's not a specific time frame. Yeah, it could be in the next year. But these are the numbers on my chart. And that would be 2050, 2130, basically 2200, 2250, 2345, and 2460. Those are levels where we're going to probably run into resistance. Could take a long time to get up to that. But those are going to be important numbers because remember, we're at all-time highs. There's nothing up there to look at history to say, oh, this is going to be resistance. We're actually creating history every minute that ticks on the charts ever since we took out the all-time high. So if we take a quick look at silver, silver hasn't taken out an all-time high, but it did take out a real important level that I was beating the drums for 3 years, actually since 2015. And that was 2149 at the Fibonacci level. And it was real important because we hit it back during the great financial crisis, and then we had a pullback. And then when it took out that number, it rocketed to $50 an ounce. But then when it collapsed and it tried to go hit that again, it hit it several more times, and it just couldn't get through it. As recently as 2015, it hit 21, like 13, I think it was. So finally, we did it. And it did it as gold was taking out its all-time high. So that's important because we closed at we put in a high of 26.18. I'm talking spot prices here, not futures prices. They're always generally a little higher, sometimes not, but that's a long story and we don't have much time left. But the high was 26.18, and we closed, let me check where we closed at. Silver spot closed at 24.36 in New York. It hit the high at 10 p.m. the night before during trading in Asia. So here are the numbers, and it's the Fibonacci's that have always been there. I would like to see a retest of 2150. It did on a short-term chart. I'd like to see it again, just to really be sure that that's good and we're not really going to collapse through it. After that, we came real close to the 2750 level, 3170, 36, 42, and then the all-time high. So there's a lot of work to go to get to there. It could happen quickly, maybe not. But the last thing to say about gold and silver, we've been talking about seasonality. We pointed that out in our previous interviews. We are now in that, we got out of the summer doldrums and the spring doldrums, actually, I'm sorry. And we're into the spring seasonal pattern that's usually an uptrend. So gold is in blue skies, basically, and silver is making a run that could end up seeing a historic all-time high in the not-too-distant future.
Steph, what do you tell our listeners who they listen to your analysis, they go to your website, TraderStef.com, and they decide, I am going to get in touch with my broker and tell them I want to buy some physical precious metals, gold and silver. And when they call their broker says, oh, no, it's a barbarous relic. You don't want to do that. They've already had their run. Why don't you buy some other paper assets in their place? What would you tell our listeners to then tell their brokers?
Run. There's going to be corrections along the way. There's going to be highs that we're eventually going to hit. But we're in unprecedented times. There aren't anything safe, except for real estate, and that's local. But land, land is not something that you can just print or create. Houses, you just can't print them. Fine art, you just can't print them. Those things that have lasting, proven value, and gold and silver in particular, maintain your capital. So, that business suit that you could buy for an ounce of silver back in the 50s, it was, $20-some an ounce. Today, you could buy several business suits for the price of an ounce of gold. So that's the one thing to remember. That same paper is not going to buy, in that dollar quantity, is not going to buy you that $20 bill from 1950 is not going to buy you a business suit today. So that really drives home the reality of what inflation is, the debasement of your currency, and you have to preserve your capital.
Steph, it's imperative that folks follow you. I know you're very prolific on Twitter, so educate our listeners how they can follow you on Twitter and and your website and the like.
Oh, awesome, thanks. Twitter at TraderStef, TraderStef, like Francis, and the website is TraderStef.com. I'll be posting this audio tonight along with all the charts that I talked about in some analysis. So go check there late tonight if you like.
Steph, I'd like to thank you for everything you have done, are doing, and will do. You are incredibly courageous and really put folks far ahead of the financial curve that the bought-off lamestream fake media does not want them to be aware of. Folks are listening to Operation Freedom. Dr. Dave Janda broadcasting from our ancillary bunker with Derek at our main Freedom Bunker at Wham Talk 1600.